Good evening and welcome to the AccendoTraders group. This is our video trade plan for Wednesday, April 9th, 2008. AccendoTraders.com, effective trade plans delivered daily. So for our routine for tonight, we're going to look at our watch list and set alerts for our flag list based upon today's action. We're going to check the news, economic earnings and upgrades and downgrades, again to see if that affects any of our stocks or stocks that we're going to look into get into. We'll look at the indexes and see where they are, if any trends are forming that we need to be aware of. Scan for some new trades, set alerts for those new trades, and have a life. So looking at the market today, we had the FOMC minutes released, and the officials feel that contraction is likely. So I just want to welcome them to the party. The rest of us have been there, so it's nice to know that you guys think it's going to happen also. They've also stated that the inflation data is very disappointing, and a lot of talk is about that because it's leading to the fact that the interest rates may not be this low for an extended period of time. Greenspan spoke on CNBC today, I believe around 4:15, to kind of defend his legacy. So be interesting to see what the market takes from that, because he has said things, especially when he was predicting recession last year, that sent the market down. So it should be interesting. AMD lowered their expectations and cut their dividends, so that should be interesting. Actually, they just lowered their expectation. It was Washington Mutual that cut their dividend and expect their first quarter to be lower than expected. But they did raise some money. So for today, the Dow was down 35, the S&P 500 was down 7, and the NASDAQ was down 16. And obviously that doesn't tell the whole story. The market stayed down and really went parallel for a while. When the FOMC minutes went out, they really started to go down, and then they kind of rallied back up into a range for the last hour of the day. So we'll talk more about that when we get to the charts. We already talked about last night, and again today, the Alcoa earnings fell short of expectations, and one of the reasons, even though they beat revenues, they had higher costs. There were no real significant upgrades. A lot of people were talking about Nutrisystem. And on the downgrade side, there was Garmin, and that was one of our stocks for last night. And there was also a downgrade on Apple. Tomorrow on the economic calendar, we got wholesale inventories, not a real lot to affect the market. Crude inventories, we might want to watch some oil stocks based upon that. Bernanke is speaking at a financial literacy conference in D.C. And Circus C has earnings before the market, and Bed Bath & Beyond has earnings after the market close. Again, probably not too much on market moving news there. And CLF, this split play has just been on fire, hasn't it? Up again today. All right, so let's go ahead and take a look at our watch list from last night. Okay, as we look at our flag list from last night, there's a couple things to keep in mind. First of all, if you look at them, we kind of have a new short-term uptrend line, which is okay. And you can see that last week we kind of fell back to it. And this week we're kind of moving over to the side towards that uptrend line. That's the NASDAQ. Here's the Dow. Same thing happened. Here's the S&P 500. Same thing going on. So we still have a short-term outlook to the upside. Although, again, remember we always trade neutral in whatever the market gives us. What I do want to say is that we got down today and we kind of consolidated for a majority of the day until 2 o'clock when the previously mentioned FOMC minutes came out, and it had all that negative information in it. And again, it was another reason for the market to sell off, and it did for about a half hour. And then the buyers came back in. Hit the 50, the buyers came back in. Hit the 10 on the Dow, the buyers came back in. Hit the 10 also on the Dow, on the SPX, and also held a 5 on the S&P 500. So certainly that also gives us a bullish feel that on a day when the market had every reason to fall out, the bulls were able to save the day. So, but we're still not moving higher. So it'll be interesting. We sort of have an ascending wedge going into these resistance level, 1400 and 12750 on here. So it'll be interesting to see what's going to happen. We don't have any news tomorrow, really. Nothing huge. So it'll be interesting to see what the sentiment of the traders will be tomorrow. AEM, we broke all our rules, and you guys know how I feel about that. Should never do it. We just felt like gold was going to have its day, and now it's just a consolidation mess, so I'm unflagging gold. Baidu, just something about $300 it doesn't like. Still going up to 5, bounced off to 5, moving to the sideways. The sideways move is on lighter volume, still kind of bullish. So go ahead and reset our alert for $300. This is something we've been talking about for a couple of days. Garmin had a downgrade today, and there was also some negative news with TomTom. So we got a gap down, and we had it fell to support. We're going to give it another day. Let's see. Reaffirm your alert at today's low and see if we can get another push lower. I'm a little concerned about the gap down, but let's see if it continue to move. Johnson & Johnson is a stock that we talked about because it was breaking this resistance of $65, and then it filled the gap, and that's kind of where we are today. It filled the gap. Volume's still good. So now what we want to do is Johnson & Johnson is play the next move up to about $68. So put an alert at today's high to move up a couple dollars to the next level of highs. Coles, we did get a gap down, still got a falling 3 going on there, but you know what? This is just a consolidation mess. So I unflagged Coles. MGM still sitting at the support line, falling 3 pattern. So we'll still keep our alert at $57 for MGM. MT, like the fact that we've got our consolidation on lighter volume, by definition is bullish. We bounced off to 5. So we got a rising 3 pattern here. That's another reason why we like it. So bullish day, retracement, bullish day. So for confirmation of that pattern, let's reset our alert around 86.40. NYX for I think I can stock. Continue to move. We got a whole 20 cents today. And our theme of the day is one more day. So reaffirm our alert at $70 for NYX. We talked about today being a gap down to the 5. Well, RIM got down to the 20 and just kept it on. And we even have a shaved top closed at the high of the day. We have our alert at 122 for RIM, 122, 123. So let's keep that alert and see if we can get the next push higher. And finally, WFR, I could really go either way on this one. Our alert really didn't trigger because it was at 72. Still have a falling 3 pattern. So because of our falling 3 pattern, we can try to catch the confirmation of that and keep our alert one more day for WFR. Okay, so now we're ready for the educational portion of our podcast, our trade plan, and we're talking about the shift to mental analysis using the book Trading in the Zone by Mark Douglas. And yesterday we talked about can we master trading, and we talked about how trading, becoming a master trader, takes different routes for different traders. Some people get to that level. Some people make it to the moon and become master traders. And some people get knocked off by the asteroid belt and never make it and pretty much curse at the moon every night and every 28 days in the cycle of the moon. And so we have 2 groups of traders. And we have a group of traders who have learned to be consistent and learned to have break through that threshold, that asteroid belt, to consistency, and money to them is within the grasp, and sometimes it feels like they can take it at will. And then we have another group of traders who have not evolved yet, and every time it seems like they're getting to that level where they have been consistent, it just slips away, and the only thing that seems to be consistent to them is the emotional pain. And I've talked to a lot of people, who the market's out to get me. A lot of that. And, the market is just data. And you as a person use your background knowledge of the market, your background knowledge to apply meaning to every tick. It's just ticks. And you put meaning to those ticks. So what we have to do is train ourselves, again, to develop a system so that we are robotic about it, mechanical about it, and we interact with those ticks based upon a system, and we don't interact with those ticks just because we say, oh, it's going up, or oh, it's going down. We need to remove ourselves from that emotional hurt that many of us have gone through, and we've all been through it. We've all have had things not go our way. So what separates these two groups of traders? Is it intelligence? Do they work harder? Does one group work harder, or is it a personality trait that we get from our parents to be traders or not? Well, we'll talk about that tomorrow. So, to provide feedback, there's our link. You guys know if you want to, go to iTunes to download the full version, which is going to have the new stocks for tomorrow. And as always, trade at your own risk. Thanks. See you tomorrow.